Welcome, my friends, to the disclaimer section of the video. Really quick, this video is not financial advice, only a source of good information. And with that being said, there are a couple of things that we're going to go over today. We're going to talk about how to make money in the US stock market using fundamental analysis for options, amongst other things, because there are other things that I'll touch on during this video. But one thing you need to know, technical analysis is still needed in order to be successful, okay? Fundamental, it's only going to tell you how much the price is eventually going to be, or it's going to speculate on it. We want to do technical analysis so we can know a lot more, okay? But with that being said, let's get into the video. Okay, now that we've got that out of the way, let's talk about how we can make you money in the US stock market. And the way that it's been done over time is buying and holding stocks or ETFs. But we're going to touch on options, different option plays, credit spreads, debit spreads. We're going to talk about them all. Now, in order to do fundamental analysis, these are the things that you need to do. All right, these things right here. If you need to write it down, rewind it and do just that. I'll give you a second.
Let's just stop. I want to write some stuff down so I can, it's no big deal, whatever.
Okay, now that you wrote that down, a couple of things that we're going to touch on. I'm going to go into the actual platform. This is the Momo platform. And we're going to briefly talk about technical analysis. Now, you see the little arrow? Okay, that is actually the RSI, or Relative Strength Index. And the green arrow is pointing towards the MACD, or the Moving Average Convergence Divergence. These are terms that you're going to have to learn in order to be successful to do technical analysis. Technical analysis would really pinpoint where the stock is going to go or when it's going to go there, okay? Much different from fundamental analysis, okay? If you want to be uber successful in the stock market, you need to learn both. You can't just rely on one, because the stock market is somewhat temperamental. Nothing goes the way that people think it's supposed to go. Now, once you've done all of that, we need to look into doing covered calls and cash secured puts and credit and debit spreads. These are the two ways that I like to use to make money in the stock market. Now, in a second, we're going to go into the Robinhood platform. Here we are. This is actually the stock that we looked at earlier in the Momo platform, Apple, one of my favorites. Now, we're going to go over credit spreads. And this, I'm going to show you two different credit spreads. One is going to be a put credit spread, and the other is going to be a call credit spread. Different terminologies, and they mean different things. Not what you would think they mean, though, if you know anything about the option platform. Because normally you would think puts are for prices going down and calls are for prices going up. But it's a little different when you're doing credit spreads. Okay, right now you see it on sell call. All right, and if you look here, I want you to notice on the right hand side, those are actually the premiums, and on the left hand side, those are the strike prices. Now, what we've done, you see the little bull that popped down. This is going to be a bullish strategy. We're going to go sell put, and this is a credit spread. Sell put, bullish strategy for a credit spread. Now, what you're doing by doing this, by selling the put, you're saying to the market makers, you do not think the price of Apple is going to drop below 125. Because that is what you agreed to sell the option as. you're going to get a credit of $28 for running this credit spread, okay? You may say to yourself, oh, that's not a lot of money. But let me ask you this. If you're hitting singles and doubles, and not home runs, you're still being effective. And that's what we want to do in the stock market. We don't want to be greedy. I'll take the $28 at the end of the week. All you do, by doing this, you're putting up $100 as collateral to make the 28. But if you've done your technical analysis and your fundamental analysis, you ought to be pretty certain that that stock price is not going to reach the prices that you picked, okay? And at the end of the week, you just collect your money. Again, this is a bullish strategy. Now we're going to try a bearish strategy. Now you go to sell call. This is a call credit spread that we're getting ready to do. So we selected the 130 and the 131. And you're saying to the market makers, I do not think the price of Apple is going to go above these prices that we picked. If you are correct, if you've done your analysis, then at the end of the week, you collected $22. Now, if you want more money, simply select a different strike price, all right? Now you see it's $37. I don't know about you, but I'll take 37, 27 at the end of every week, and then I'd be a problem. If you want more, if you've done your analysis, you could simply change the contract number at the top, 37 times 2, 3, or whatever you're comfortable with. But be reminded that for every contract, you're putting up $100 as collateral. That's the only thing you need to keep in mind. But if you've done your technical analysis and your fundamental analysis, you shouldn't have to worry about it. Okay? Now this Apple stock, this is one of my favorites to do this strategy on. Now, what I wanted to do with this video is just hop on here and give you some very quick, useful strategies that's going to help you be successful in this ever-changing stock market. Now, if you got any value from this video, like, share, and subscribe, and hit the notification bell so you can be informed whenever I drop a new video. Now, what I'm going to do in the next video, I'm going to release something else. I'm just going to drop all the gems. I want to help everyone out because we are representing what I think to be the 99%. Okay? See you on the next one.